Before we start with today's episode, we have a short announcement and a new partnership to share. We are very, very happy to welcome eTonic as a partner of the podcast. eTonic is, as some of you may know, a Berlin-based boutique consultancy working at the intersection of digital money, digital identity and payments. And also, just to be fully transparent, something many of you may already know, I also do work with eTonic. Together with eTonic, we're launching a new series within the BFRR podcast called the Digital Money Interview Series. And around once a month, we'll doing an interview with an interesting voice from the digital money space. For this series, Jonathan Knoll will be joining us as a guest host from the eTonic side, and we'll be co-hosting this together. And before we go into today's episode, we want to briefly tell you more about the series, and I also want to introduce Jonathan to you. Jonathan, it's great to have you on BFRR, not just as a guest, but now also as a guest host of the Digital Money Interview Series.
Thanks, Jonas. Thanks for having me. It's great to be here today.
Before we jump into what's coming up, I want to start on a personal note. You've been listening to this podcast, since the very beginning, I think. Can you give us some background on yourself as a person and tell us what motivated you to step into this guest host role of this series?
Yeah, happy to do that. And again, thanks for having me. For those listeners that don't know me, I've been fortunate to have worked at some amazing companies. I started my career in what today we would call Web 1, so Sun Microsystems. Some of your younger listeners won't recognize that name, but one of the most innovative companies I've ever worked at, the company that brought you Java, so it says it all right there. I then moved into payments, got my Web 2 experience at PayPal, both in San Jose, which was, as I like to call it, my year in Silicon Valley, and then across Europe, responsible for partnerships with banks and financial institutions on the basis of open APIs. Now, this goes back 12, 13, 14 years ago, so well before open banking, PSD2, and things like that. And then I jumped very early into the Web3 space after I left PayPal in 2017. And it was at that point I got very lucky to have been one of the first hires at the Libra Association. You may remember that's a stablecoin project initiated by what was called Facebook at the time that's received a tremendous amount of public and regulatory attention or scrutiny, depends on how you want to look at it. And so it really means a lot for me to be here today because, as you mentioned, I've been an avid listener from the very beginning when the podcast launched back in 2019, June of 2019. And that time is important because it's also coincides with when the Libra Association was officially announced.
Yeah, and I really remember this time quite presently in my head. I remember this was the time where I was still working on my PhD thesis, also looking into stablecoins. But this was also, as you mentioned, the time period where we, or to be more precise, Alex launched the podcast. So you guys, at Libra, were also one of the key reasons why we have started the podcast in the first place.
Yeah, and I signed my NDA at Libra a few months before that, but really that official release of the white paper in June of 2019 felt like sort of the starting gun for something truly transformational in digital money. And to me, it's really interesting with hindsight, looking back almost 7 years later, which is scary it's been that long. But the ideas behind Libra are finally coming to life, not as we originally had hoped and anticipated, but through many different projects and companies and regulatory approaches and the like. And so for me, it feels like Bitcoin, Fiat, and rock and roll has been documenting that arc in real time all along the way.
Yeah, and that was at least also what we always wanted to do, because we talk in this podcast very often on what Libra did inspired, like the digital money movement, CBDCs, now companies like Circle, right, where also a lot of the ex-Libra folks are now working out, and tech stack like Aptos, etc. So yeah, that was exactly our goal, to document this in real time. But Jonathan, when you look a little bit back, like at the Libra era from where we are today, like how do you think about it now,
Well, it obviously didn't turn out as we had hoped, as I mentioned, but I don't see Libra as a failure. I see it much more as a catalyst. When I was at Libra, I used to make the joke that I didn't know if I was working at Napster or Spotify, but clearly you need a Napster to pave the way in order to have something like we have with Spotify today. And also there, probably should mention for your younger listeners, Napster is an early peer-to-peer music sharing service that popularized digital music distribution back in the 90s, but it did really pave the way for streaming platforms like Spotify. And I think in a similar vein, I would say Libra played in kind of a similar role in the sense that it forced regulators, central banks, other financial institutions, other projects to engage more seriously with digital money much earlier than they otherwise would have. A lot of what we were doing then felt very controversial and new, right? The concept of stablecoins, or even explaining what minting and burning is to people, right? Reserve-backed tokens, new governance models, all that's very mainstream now. A great example is the MiCA regulation is and was a direct response to Libra. So to me, if I look back, what's different today now, though, is the conversation has moved away from that theory and into execution, right? Back then, it was more about white papers and almost academic debates in a sense. And today, we have real products live, more coming on, hundreds of stablecoins at this point, millions of customers using them, and regulators are writing actual rules, which, if you go back 7 years, all of that was missing. So to me, we're in a kind of a new phase. I call it the critical scaling phase.
Yeah, and it's definitely a completely new time as compared to Libra, as when you said no regulation in place, understanding was very bad. It was just a new thing now, right? Stablecoins now, it's about mainstream with very high market capitalization, all the key PSPs going into the domain, central banks looking into the topic. So a lot of progress that has been made, lots of maturity that has been made. But you also said, Jonathan, that this is think currently stablecoins are in a critical scaling phase. Like what exactly do you mean by that? Like how do you see this market exactly developing at this point?
Yeah, it's exciting to observe it all unfold in real time before us, as you mentioned, all those examples. And I think I would characterize it as back then we were still at the is this possible stage, right? Kind of just testing out what works and what doesn't work. And now we're definitely at the how does this scale stage. And that's something we actually spent a lot of time thinking about at Libra. If you think back, given the backing we had from all the large brands, not just Facebook, but all the others as well, even then, 7 years ago, we were thinking through this question of what if hundreds of millions of users use the platform, right? And, huge amount of just volumes. And we had to kind of think in those terms. And that was very, very unique among blockchain projects at the time. And so when you get to that point of scale, questions around things like trust, governance, obviously regulation, real customer needs, they suddenly matter a lot more than just clever technology. And I think we're in that phase now where good ideas here now in the next couple of years, they're either going to turn into durable, lasting infrastructure, or frankly, they're going to quietly disappear.
BFRR has basically, traditionally had a very strong European focus. I mean, initially we started out of Germany. We had the podcast even in German until the beginning of 2025. Now, I think you're kind of, an interesting person here because as you have said, you worked for a lot of different, also multinational global firms, companies. So you have seen a lot, in the United States, also worked together with companies, projects in Asia. But, as a person, you are now also a European yourself. So I think like a German citizen, to be precise. Like, how does this kind of global insights you have, the experience you have in this domain, how does this shape the approach towards our digital money interview series?
Yeah, great question. So yeah, absolutely. I think I'm a bit unique in the sense that I grew up in the US. Feel very lucky to have been born where I was born, right? That's always sort of just the luck of the draw. I grew up in the great state of Minnesota, Jonas, where you've been to. But in the meantime, I've spent more time now in Europe than the US. I've become a European citizen. Munich has become my home. This is, my wife is from Bavaria. We've raised our daughters here, right? So I care very deeply about Europe succeeding here and the role Europe plays in all of this. And I think Europe has made some really important contributions. MiCA, as we mentioned earlier, although obviously imperfect, was a huge step forward. But at the same time, Europe can't operate in a vacuum. I think what people sometimes forget is that payments, banking, money capital movement, they're all inherently global today. And that really wasn't the case 20 years ago.
No, definitely not. And like practically speaking, like what's your goal? Like how do you want to bring this global perspective into this series?
So the idea behind it is we want to talk to people who are building and operating in very different environments outside of Europe, potentially within, but also very much without, kind of get that outside in perspective. So we have sort of a list of curated guests. We're going to get great views on regulation projects in places like the US, both from established players, but also some new startups. We're going to discuss the view from Singapore, right? And also, as well as the cross-border corridors to places like the Middle East and Africa. And even a bit closer to home, we'll get a view on what it's like to operate in I'll call it AU adjacent jurisdictions like Switzerland and other places. And I think also telling a lot of the guests will have, almost all of them, frankly, have also been working at the international level across things, standards bodies, working with regulators, even the UN, and thinking about how this fits together globally, which I think is the next iteration, sort of the evolution of where this is all going. So hopefully that can all help inform the thinking in and across Europe.
And that fits very well also with the approach that we want to follow with this podcast, because as we started just being German, European, now we also want to become a little bit more global to also get insights from all these important global parts of the world, because so much stuff is happening not just in Europe, but also in other jurisdictions. So I'm super happy that we try to combine this and bring this in also via this Digital Money interview series. And I also know, Jonathan, you were very deliberate about the guest list for the interview series. So of course, we don't want to tell all the names now because you stay curious, but definitely very, very interesting speakers and companies and that we will bring here. But, how did you come up with a suggestion for the guest? Like, what does connect the people that we or you interview as part of the series?
To be very honest, it's personal, right? Again, I've had the very good fortune to have worked with all of our guests that we're lining up. These are people I know and trust. Jonas, you've heard me say sort of in the trust circle, right? These are people who have actually built regulated financial products at scale. And the idea is to hopefully avoid marketing spin and hype and just focus on real experience. So for example, a number of the guests come from PayPal or have worked PayPal in the past, or maybe similar roles in risk, regulatory, other kind of fintech backgrounds. And candidly, I do think Web3 has a lot to learn from that generation about things like customer focus, risk management, execution, etc. Great question. Hard to pin it down to one. I guess I would summarize it basically by saying start with the customer problem, right? Too many projects that I've seen in Web3, but other places as well, right? They often start with amazing technology. And then after they've built something, they go search for a use case, right? That is sort of a common error. And I think fintechs in particular, if you look back at my arc of the last 20 years or so, sometimes they learn the hard way that you have to work backwards from a real customer need. And that's especially true in payments and financial services. So as I mentioned, I was just fortunate to have worked with a lot of great companies with a lot of great people. For example, a great leader I worked with at PayPal, Rupert Keeley, who was heading up Europe for PayPal at the time. He had this sort of interesting approach. We would come up with these great new product or partnership ideas, right, from the BD group that I was a part of, and would go pitch it to the exec committee. And Rupert would always ask one simple question. He would say, Jonathan, why would a customer do that? And it became kind of a running gag for our team, right? And I laugh about it today a little bit. But you would be amazed at how often that question does not get asked. And so my view, technology is great. It's really important. It's always necessary, but it's never sufficient.
Jonathan, thanks really a lot for sharing the motivation, behind our joint series here. We are really excited to have you guest hosting the Digital Money series here on BFRR, and very excited for the conversations ahead. Welcome to a new episode of BFRR, our Bitcoin, Fiat, and Rock and Roll podcast that explores the intersection of traditional finance, digital assets, and digital money, and helps you understand how both digital assets and money will evolve in the future. I'm co-host Jonas, and today I'm joined by our guest host, Jonathan Knoll. Hi, Jonathan. Great to have you with us today.
Hi, Jonas. Great to be here. I'm really looking forward to our inaugural Digital Money interview series.
Indeed. I'm really looking forward to kicking this series off with you and also with a very special guest. So what we will cover in today's episode is the topic of stablecoins, but in a different form that you may expect now when you hear stablecoins, because we do see that stablecoins have become one of the fastest growing parts of crypto, but almost all of that growth has been centered around US dollar and US dollar stablecoins in particular. So today we are going to talk about a very different approach, namely asset-backed stablecoins, or to be precise, also rather gold-backed stablecoins.
Yeah, that's right. Today our guest is Kurt Hemecker, CEO of DGLD. Kurt and I have worked together across a number of chapters in this industry, everything from PayPal to the Libra Association and a few spots in between. And in my view, there's few people who have spent more time thinking about what it actually takes to bring real world assets on chain in a credible way than Kurt. So very excited about the episode. We're going to talk about why gold still matters in a digital world, how asset-backed stablecoins fit alongside fiat stablecoins, and what it really takes to build trust when you're tokenizing something people have relied on for thousands of years. So let's jump right into it. Welcome, Kurt.
Hey, first of all, Jonas, a huge thank you to you, to Bitcoin Fiat Rock and Roll, and as well as Jonathan, to you and Etonic. Really happy to be here and discussing what's probably one of the hottest growing sectors today across blockchain and the tokenization of real world assets. I guess just one distinction: DGLD, digital gold. That's our flagship product. I'm actually the CEO of Gold Token SA, which is a wholly owned subsidiary of a very large precious metals company, one of the leading precious metals companies in the world, top 5, MKS PAMP. So just wanted to precise that. But love to have DGLD out there front and center, because that's very much the product.
Great. Thanks for that correction. Let's talk a little bit about how you got into it. I mean, you've been in the crypto and the digital asset industry for a long time. You joined Libra after your time at PayPal. But talk a little bit about how it all started and kind of what inspired you to, back then at least, take a career pivot into crypto and into digital assets.
Yeah, it's a really interesting journey, without dating myself, but I've been in Web 1, which is, if you've read the Chris Dixon book, Read, Write, Own, I've been in Web 1, which was read, and Web 2, which was write, and then now we're in Web 3, which is own. And many of you have seen the Steve Jobs famous podcast, his Stanford commemoration speech, I think it was in 2005, saying you can connect the dots looking backwards. And looking backwards, definitely my career makes sense, starting in first of all, developing software and encryption, moving into payments and telecoms, and that morphed naturally into an interest into this emerging blockchain technology when the Bitcoin white paper burst onto the scene in 2008. And I'd been working in mobile payments, worked for a company that had been Zong, that had been bought by PayPal, where I also was concentrated on developing mobile payments in partnerships with mobile telecoms operators with PayPal, and had the great fortune of then working with the Libra-backed DM project pretty much from start to finish, from the day it was announced, the selling of the IP and the assets at the end of that. And it's really interesting. What I've always said is and I'm sure Jonas and Jonathan, you've seen this in your trajectories through Web3 and crypto and stablecoins, but there's something for everybody, right? If you're a macroeconomist, if you're a technologist, if you're a mathematician, if you're a finance expert, if you're into social impact, there's something for everybody to touch across it just encompasses everything. I could go on for this, but I'll pause there for a second for any follow-up comments or suggestions there.
No, great context. And I think you're absolutely right on that. That's, I think, why we're all excited to be in the space. Connect the dots, though, to how that experience brought you ultimately to lead DGLD.
So when I left DM Libra, I worked with Mina Foundations, shepherding the Mina protocol, which is focused on zero-knowledge proofs and privacy-related, looking to find product market fit. And to be honest, that was really hard to do. I think that technology is still probably a few years out from reaching its true product market fit. So we ended up restructuring the foundation. And as I started looking for other challenges to do, I was speaking to some of my old colleagues that had worked at Libra and DM, notably the CEO of MKS PAMP, who's now James Emmett. And they were really looking to breathe life into a tokenized digital gold project that they had been part of several years ago. And so we're looking for somebody to lead the project. And I jumped at the opportunity because I thought the convergence of everything that's happening with tokenization, with things happening in the macro environment, with the regulatory environment, technology, it was the perfect time to really lean into this space.
Great. And as I mentioned at the onset, you and I go way back. We are paths have crossed at places like PayPal and Libra and other places. Can you talk just a little bit about what those experiences specifically might have taught you about how hard it really is to change money? And if there's any like 2 or 3 sort of lessons learned from PayPal or Libra, I think the listeners would appreciate that.
Yeah. So at the very high level, um, when you go and also this tips a little bit to the Peter Thiel book, going from 0 to 1, which is the hardest thing to do. But it's when you're talking about payments or actually even any kind of application, you need users and you need businesses, right? You need a market and you need liquidity. On the payments side, the challenge is how do you get merchants if you don't have consumers, or how do you get consumers if you don't have merchants? So you have to how to get that flywheel going is probably one of the most difficult pieces that you need to get going. And one of the lessons that I learned too, it's these are very crowded, very noisy spaces. So what comes to really what the cream will rise to the top in terms of what is the really good technology, who are the players that are really providing value to their consumers and to the merchants or to the end users of any platform that you are building. And one of the things I also learned was that it's difficult if you're a middleman. The best thing is to be at either at the starting or at the end of a transaction. But if you're just in the middle, it's very easy to become replaced by the next thing. But if you own one part of the transaction, so to speak, it starts building a kind of moat that's a bit more difficult for others to catch up to.
So basically that you are included some kind of end-to-end, if you will, right?
At least at one of the ends, yes.
Yeah.
And of course, if you can, even being at one of the ends is just not enough. You need to make sure what's going on in the middle is also very efficient, compliant, and robust as well. But again, unless you have some super magic sauce, it's good to own one of the endpoints.
If you maybe look back to the Libra journey, Kurt, like, and you said also from a quote before, it's all kind of obvious if you now look back. So if you from today kind of look back to your Libra days, right? I think for us this podcast was Libra was super inspiring for this podcast, because I think one of the key reasons to get it started was really Libra, because so much focus was now on going to reinvent money, if you will. So we really followed that very, very closely. And it was very interesting to see how dynamics change, regulation change. But of course, it was also somehow a shame. So I would love to have seen the live product in the end. But maybe from the experience you have and everything, like, is there something you would would have done differently? Or do you see a scenario where, basically this could all have worked out? Or was it just not good timing, not mature enough?
Great question, Jonas. I think hindsight is 2020. I think in terms of doing things differently, right? What people don't realize, right? Even we're saying it was a Facebook-backed Libra DM project, and they were the initiator. They led a lot of the brain power and just tremendous amount of great things that were developed as part of that. And you see that today with the projects that were offshoots of that, notably Aptos and Sui and Lightspark and others that have gone on in the industry. But in hindsight, it seems like it was killed politically, not technically. So, what would have been the right way to navigate that? I'm honestly not sure. The association, Libra Association, and then subsequently DM were truly independent, and there were a lot of other actors in it, in addition to Facebook. But I think that shadow. And, the shadow of Cambridge Analytica was just a little bit too heavy at the time. But again, I think the entire industry owes gratitude to the team that ran with that and said it, because as you know, right, it sparked the Digital Euro Association and this podcast and different initiatives, but it also rose, as they say, it was a rising tide. So it helped raise the level of the discussion, push things forward, really bring forefront to the attention of regulators and governments and policymakers. And now if we look back, right, again, it's not perfect. Regulation is evolving. but it's evolved where there's at least clearer frameworks. This is here, it's coming, and we see Circle, we see a lot of projects now. We see tokenization. I think institutional tokenization is at a tipping point. That wouldn't have happened. So, again, I think the project had a lot of value just from that aspect.
Absolutely. And it's so kind of interesting and crazy at the same point if you think about what Libra DM all enabled without ever like launching like the product in this sense, right? So I think that's really massive. And I totally agree, Kurt. So many things we would not have seen today. They're basically $1 billion industry came up. Just, I mean, not maybe the sole driver, but a core driver was this. So definitely. If we now maybe look a little bit back into the different cycles also, because I can imagine, Kurt, when you started working on this with Libra, like the term stablecoin may have been out, but, just a few geeks knew about it or not a lot of stablecoins out. But what do you think, what is the stablecoin cycle like feel to you compared, feel to be like the stablecoin cycle now, feel to you compared to a Libra day? So what do you think is generally different? You already referred a little bit to, it's more into the building things and less the hype. But how do you think can this be compared and how is it different?
Well, a couple of things are different. One is, if you look back, that was in 2018, 2019, and of course, blockchain and what was being built started way before then. But it's complicated, right? The technology is complicated. The user experience is still complicated, but it's evolved. There's a lot of middleware now, so it's much easier. For example, you can cut and paste securely audited smart contracts on different platforms. For example, like on OpenZep, that didn't exist. So there's a much more mature layer of technology that's been built up, and a lot of there have been hacks and bugs, but these things get discovered and fixed. So the technology has matured. And then on the other side, as we mentioned before, the regulatory frameworks, again, while they're still evolving, they're much clearer than they were before. If we look across the Genius Act, hopefully we'll see the Clarity Act passed soon in the US. We all know, right, there's some challenges with the MyCar framework, but there's discussions there on how to ease maybe some of the capital requirements there and the DLT sandbox. So I think the technology has matured, the regulatory landscape has matured, governments have become friendlier towards it. And then what's really interesting, right? The first use cases for stablecoins, initially the big one was Tether. It was really used for parking speculative crypto trades back into a stable currency or a stable token without having to cash out. But now that's moved on. And again, this is no secret, but now with the US government embracing stablecoins in the Genius Act, and they're looking for new buyers of US treasuries, right? And in some cases now there's more treasuries held in stablecoins than by certain countries. So that's driven, that undeniably that's driven a large part of the growth in the market, just having it backed and supported at that level. But again, it's really interesting, right? There's the sort of challenge between how does this impact what banks are doing, how does it relate to banking licenses, how do you make it attractive to the stablecoin holders in terms of being able to have interest or earning yield on what you're getting, and what would that do to banks? And of course, there are some limitations on that right now as far as the fiat-backed stablecoins go. So it'll be really interesting to see how that kind of evolves. But I think there's a couple of aspects here, right? One is, what is the instrument that is backed by the token? And then the second thing are all the advantages of having that on a blockchain, the 24/7 instant settlement, the wider trading market. So those are all the things that come into play.
Yeah, and that really sounds like a really good environment, a completely changed environment, because everything what you said, Kurt, like mature technology, regulatory clarity, sandboxes, friendlier government sentiment and approaches, and also government interest in stablecoin due to the treasury, right? So for the buyers of the treasury, like nothing of this existed when Libra started, right? So that's so interesting to see how this all changed within 5 years or 6 years, because I'm often like over optimistic when it comes to timeline and blockchain, and I guess we all are, right, in the sense of, oh, this will now happen in a few months. No, it will take longer. But here, if you zoom out, it's really impressive what indeed I think happened in this 5 years, and often people forget that because they zoom in.
Yeah, and just again, talking sort of at a broad general view again about what was happening at that time with Libra and DM and cross crypto and the different things. There's a couple of huge global trends that we're seeing. One is, and collectively, right, the human race, we're in this experiment. How do we trust? What do we trust, and how do we trust it? Right? There's growing distrust in centralized infrastructure, whether it's central banks, central health institutions, mainstream media, all the content, everything that we're reading. So how do we trust this? And then there's this concept, well, using things like Byzantine fault tolerance, and we can have decentralized trust systems built in. So actually it's not even trust, it's don't trust, verify. We honestly don't know if these work yet, right? And that's where, back to what I was saying before, there's something for everybody in blockchain. That gets into the governance systems and how do they get created and how do you govern, and how does what gets managed and gets trusted on a blockchain, and how transparent does it become? And there's so many things in there too. Like one of the things we still see today is the advertising model on the internet is broken. So you can imagine a world where you have micro payments, right, for content that you want to buy or consume. Right now, you go to a paywall, you see one article on a website. Okay, I'd buy it for 10 cents, but am I going to register for 60 euros a year just for that one article? Probably not. So I'm sort of frustrated, right? Because blockchain has the pieces are there to address this kind of sort of challenge it's faced. It hasn't, I don't think it's been addressed in a good way yet. But anyway, I kind of digress. There's a lot of other things that we should probably move on to.
No, I do think though, it's really good content because it really sets the stage for what you're doing at DGLD. And as I understand it, you're kind of sitting at the intersection of digital money and something which I find really, really fascinating, much, much older, obviously, gold, right? Gold's been around for thousands of years, well established. And we talk about trust and your comments you just made about where we are in that arc. But gold's been around for thousands of years, and it's been a physical store of value. And now recently hitting all-time highs, one after the other in 2025. As we speak today, because of what's happened in Venezuela, it's spiking again. So talk us through, why do you think gold needs to be tokenized?
So first of all, there's a market for gold. People want gold. It's the oldest trusted asset, and it's not going anywhere anytime soon. It's there's an interesting concept I'll talk about in a minute called the Lindy effect. But again, back to gold, right? There's different ways of working with gold. You could have physical gold, but then you have to store it, you have to manage it. Or you can have ETFs, but you don't actually have access to the physical gold with the ETF. That's you're entering into, there's an issuer, and you have to trust somebody that their gold really is there, but you don't really know if it is, and you have different management fees. So tokenizing gold gives you the benefit of basically owning that token is the same as owning the physical gold, but you don't have the storage, logistics, and hassles that are associated with it. The other thing is tokenizing it on a public blockchain is now you can use that token on decentralized finance and centralized finance. You're in an open market. So there's 24/7 instant settlement without having to transport physical quantities of gold across borders or to other locations. And it also turns the ability from the time tested right now, today, we're living the debasement trade, deglobalization, all these challenges. But in addition, if you can earn yield or interest and lend it out, all of a sudden that starts to become a really, really attractive instrument. And it's been an amazing year for gold. It's had a record run. Who knows? There might be some bit of a pullback, but again, back to thousands of years of history. The thing with gold is there's no government behind it. So if you have gold, you have gold. It's like a bearer instrument. There's no institution necessarily that you need to rely on, or that if it goes bankrupt, if you have your gold, you have your gold. And so again, tokenizing that and being able to bring those qualities into the tokenized world make this a really powerful asset.
So it's basically, Kurt, if I understood you correctly, it's about make it very simple for people to store it, because you don't need a physical storage, which is painful, where you need insurance. Maybe your house burns down and the gold melts or something, then you have issues. It's the first thing. The second thing is also that you can get it's remunerated, basically, so you can develop models out of that. You can even earn interest with gold, which you can. So would you say this is like the two main, let's say, USPs compared to physical gold and also ETFs?
I'd say those are exactly the main USPs, if you will, of tokenized gold. Now, what gets interesting, though, is not all tokenized gold is created equal, just as not all stablecoins, not all treasuries are created equal, like a U.S. Treasury versus an Argentinian Treasury bond. It depends on what's backing it. And that's why I'm really excited about working with MKS PAMP and with DGLD, because MKS PAMP is one of the most respected names in the precious metals industry. And the gold that MKS PAMP is able to vault and hold for DGLD holders, it's insured. It's in a business that's been around more than 70 plus years. It's one of the most respected names in terms of the LBMA for refining gold. They act as an LBMA referee. So again, having a gold token backed by gold that's managed, the physical aspect managed by a company like that, makes a world of difference. And of course, they're managing all parts of the business across the refinery process, transformation, institutional clients, the trade, acting as a market maker. So those are where it starts to get really down into the details of what makes a gold token better than another gold token, if you will, or one that becomes more interesting to hold and to buy.
That's some super interesting insights. With that as a background, do you then see digital gold as more complementary to USD stablecoins, or generally fiat stablecoins, or as a hedge against over-reliance on fiat?
That's a great question. I think I think kind of both. And here's one of the things that really intrigues me is, if you're a crypto or a Web3 or a Bitcoin extremist, it means you don't really believe in fiat, right? I mean, if you're on that end of the spectrum. So if you're on that end of the spectrum and you're participating in DeFi and these other trading worlds, why do you want to park your money in between trades in a fiat-backed instrument? Why not park it in something like gold, which, again, technically, it's not really a stable coin because the price of gold isn't stable, but it's stable in terms of it's backed to a set quantity of gold, which will have a set value to it. In the case of DGLD, one token is 1 troy ounce of gold. And of course, you can have fractional amounts of that. So I would see it, in one case, I would see it used, depending on where you are on the orthodox spectrum of believing in fiat currencies and banks and trading. Maybe it becomes a better trading pair or place to use it in that context. And then also, could be used for payments as well. And again, it could just be used as a store of value and generating yield or interest on it. And it really, at the core here, in my mind, there's Bitcoin, which there's fiat currency, dollars, and then there's things, precious metals, and there's gold, which is at the top of that. Of course, there's other things in oil and et cetera. And at the end of the day, what has value? Why does something have value? Well, it's because people believe in it. But then what do they believe in, right? And the belief is different across these different instruments. So if you believe in the dollar, well, why do you believe in the dollar? Because it's supported by governments, because you pay taxes in it. And I hate to say it, but ultimately it's backed by violence. If you believe in Bitcoin, why do you believe in it? Because it's backed by code, committed code. There's a system there. And as long as you believe that those code commitments are going to stay the same, it's not going to be forked. The circulating supply isn't going to change. You believe in that. If you believe in gold, well, you have something that people have believed in for thousands of years. You believe in a metal that doesn't rust, that is basically persists throughout infinity because it doesn't decay. And that gets, I touched upon this before. There's a really interesting concept. I'll quickly mention it, but it's called the Lindy effect. And in the 1950s, there was a delicatessen in New York where actors between jobs used to work. I think Nassim Taleb wrote about this in his book Anti-Fragile. But the actors, they noticed that for Broadway plays, the longer time they were running, the longer time they would tend to run. So if you're talking about investments or technology or things that don't have a natural shelf life, like you could kind of apply it, for example, to humans, but we perish at a certain point of time. There's a shelf life. But if something doesn't have a natural biological shelf life, you can apply the Lindy effect to it. And gold has an amazing Lindy coefficient of thousands of years. So it's going to be around for a lot longer. Bitcoin is still kind of early on, right? The earlier on you bet on something with a lower Lindy coefficient, well, it's a bigger risk reward ratio, maybe more volatility. And then by the same token, we were talking about Bitcoin, fiat currencies, gold. Fiat currency, many of you know this, many of the listeners will know this, but there's been no fiat currency that's lasted as like a world reserve more than 100 years. And it's probably the changing of the guard of the US dollar. It might get bloody. There might be, a world where there's no longer one single reserve currency, but we all know this is in very high state of evolution.
Okay, very cool. Very cool. I love it. The Lindy effect. Something I learned something on this podcast. I love it. But let's take it down a notch. Let's get really concrete now. I think it was a great segue into kind of the background of what you're doing and where you're working in. But talk a little bit more about what you've actually built, right? You're leading DGLD. Talk a little bit about what the company is actually doing. You've touched on a few of those points, but like really focusing on who today is the core DGLD user and what problem are you helping them solve?
Yeah, thanks, Jonathan. So we're really at the beginning stages of this. MKS PAMP has now acquired full control of the company. We're really at phase 0 of relaunching. And the idea is that you can have a blockchain, a token on a blockchain that represents property rights for physical gold. So you own the gold. And then so you can benefit from the value of gold and how that appreciates and evolves in the market, but being able to then benefit from that being on blockchains, using it in trading venues, and being able to trade it 24/7 with instant settlement without all the physical logistics. And then also being able, as we mentioned before, to earn yield on top of that. Now, who is this for? Why do you want to use it? Well, there's a market for it. There's a market for gold. Today's gold market, the traditional bullion market, is $23 trillion. Today on blockchain, right, there's a couple of big players and then a lot of smaller players. And we're still, we're going to be one of the bigger players. We're aiming for a $3 billion market cap within 18 to 24 months. But it's small. So on blockchain today, there's three, depending on, I don't know, maybe it's $3.5 billion. And compare that to the $23 trillion traditional market, the $4 trillion crypto market. its early stages for tokenized gold. And the idea is that this is a token that exists across networks, across chains. Today, it's live on Ethereum, it's live on Base, and the idea is to make this a multi-chain, omni-chain token. And the target market is institutions, institutional finance, being able to use gold in repo agreements for collateral, for lending, for settlement. And so while we're gearing towards institutional actors, but it's also friendly and available for retail as well. Now, today I would say it would have to be crypto native retail because anything crypto is not for the faint of heart still. But again, I think there's a big market for crypto native retail. And again, we see as the crypto market matures, they want exposure to gold as well, right? They're excited about the meme tokens, but they also now they want to stabilize their assets and have a solid investment and being able to use channels that they're used to investing in. So I think there's a lot of OG cryptos across the market where this starts to become really attractive. And then being attractive within communities and such as Base or other really tight crypto Web3 communities.
Great. And it's funny, I observe that, the stable coin market obviously is booming, right? But everything's a stable coin now, right? And there's so many things that you could count as a stable coin, right? Is it a algorithmic stable coin? Is it, EMT? Is it, there's all different definitions there. And then we're getting into tokenized deposits and all sorts of different things. So how do you think about DLGD? Is it a stable coin or is it an asset-backed token? Do you see a difference there?
I see it very much as a real world asset backed token. And again, as I mentioned before, because it's ultimately it's representative of a certain amount of gold, which has a trading price according to the gold market. But that's not pegged to a fiat value, if you will. It's whatever the going rate of gold happens to be. And what starts to get really interesting too, and this actually one of the things, Jonas, I should have mentioned earlier in terms of we talked about yield and holding gold and being able to trade it, redemption and being able to touch that physical gold if you want to is super important. So working, and again, through the channels that MKS PAMP has, people want to know that, okay, it's great. I own this gold. It's stored somewhere. But if I want it, can I actually get it? And we're allowing redemption down to one gram of gold currently. This is through goldavenue.com, and we're going to be expanding that internationally. So just kind of back to your question, John, it's also that ability to redeem gold, which becomes really, really important.
And to this, Kurt, like as I'm a very interested, curious German citizen with some crypto accounts, like you said, you are live on Base and Ethereum, if I'm not mistaken.
That's
right?
correct. And the ticker is DGLD, yeah.
Okay, yeah, that makes a lot of sense. Is it then possible for me to already get the tokens via my, let's say, crypto exchange of trust, or are you currently, within the listing
Currently, it's
processes
traded on decentralized finance. We're working on, still working on, and again, we're really starting. We literally started last month, so we're very on in the journey. I'd be happy to have this podcast again in a year and see where we are on that journey. But if you go to Uniswap or Aerodrome, it's available on decentralized exchanges like that.
Yeah, and sorry, Jonas, if I'm going to out you here, but Jonas is very much of a gold bug. I don't know if you knew that about him.
Exactly. So let me get up my Uniswap account and to try some things out here. Cool. So maybe, the time is already progressing, and I could talk to you, Kurt, for hours on this topic. But let's maybe try to wrap it up by looking a little bit forward. So you see that with DGLD, you're kind of in the initial phases. You launched literally 1 month ago. Like, what can we expect? What does maybe the roadmap look like for the next 12 months? For DGLD?
So for DGLD, it's going to be expanding institutional partnerships, working with financial institutions that are already trading in gold or being able to use it as collateral. We're going to be expanding the number of networks that it's available on, and then working to become available on centralized exchanges and ensuring all the compliance and regulatory aspects that need to be done to grow this in a really really healthy way.
Cool, very excited. So we definitely keep an eye out for news then in the next couple of months. And maybe to close this out, Kurt, like the last question, really now you have to pick up your crystal ball and look into the crystal ball. So if we say fast forward 10 years, what would you say, what does success look like for DGLD, but also what role does tokenized gold play in the whole sector? You mentioned some of the numbers. Maybe you already have a number for us, but whatever you want to share or whatever your prediction says.
So I think it's not only tokenized gold, right? There's going to be other additional precious metals that get tokenized. Silver's been pretty hot. There's platinum. There's other metals. So I think we'll see other metals become tokenized. But if we fast forward 10 years from now, and I mentioned it before, there's about a $23 trillion market. I think we'll see a large migration of that, as we will with other markets, onto tokenized platforms, onto the blockchain. Whether 10 years, whether we're 50%, 80% of the way there, but that's the way the world is moving. And again, sort of dating myself, but flashback to like the early 1990s. If you were trading on you had to be a professional broker to trade through a platform or have a relationship with one. And we saw E-Trade and international all these brokerage platforms that all of a sudden gave access to retail for that. For me, that's a little bit the same thing, that happens with blockchain. It democratizes access to all these instruments. And I think, so we're going to just see the markets continuing to shift towards blockchain as the technology advances, these experiences get better, and the regulatory frameworks become clearer.
Great, Kurt. Let's wrap it up with that. Great way to end it. This has been a great conversation. Thank you so much, not only for sharing what you're building with DGLD, but also how you're thinking about things like trust and money and the future of financial infrastructure and the Lindy effect, which I know I've now learned about. Thank you so much for your time. Really appreciate it. For anyone interested, by the way, we will include links to DGLD and Gold Token SA in the show notes.
Yeah, and also thanks from my side, Kurt. It was really a great pleasure. So thanks for coming to the show, and also a very great thanks for all the listeners that listen to this episode. So if you like this podcast, as always, please subscribe, review us, give us a good rating, follow us on YouTube, LinkedIn, refer us to your friends, your family, your colleagues, whoever is interested in the future of money. That's basically what helps us most to increase reach of this podcast. And we will definitely continue this work. And also thanks for this focus on the gold topic, because as Jonathan said, for me, it was very interesting as a person that is very interested in gold and loves to see this next step of tokenization. So until then, this is Bitcoin, Fiat, and Rock and Roll, bringing Europe's perspective on digital money to the world. Thanks for listening, and see you next episode. Bye-bye.
Thanks.
The views expressed are solely the personal opinions of the hosts and are provided for informational purposes only. This podcast does not offer financial or investment advice. Always conduct your own research and make well-informed decisions before investing. Please be aware that the hosts and guests may hold cryptocurrencies or digital assets discussed in this episode.